Welcome everybody, let's get going. And right, I'm ready. So, okay, what we've got in the coming week is the Fed on Wednesday and US GDP on Thursday. What I'm looking at here is, what I'm going to be looking at in the coming sort of 45 minutes, 60 minutes, is I'm just thinking ahead to where we are as we head towards the middle of the year, and then we look to the second half. And what I'm interested in is I want to assess the dollar, because I think where the dollar is heading, that could really have a big influence on what we might see and what we should be doing in the coming weeks and months as 2021 ticks by. So we're actually looking at the 10-year notes, 10-year US Treasury notes here, and this is a weekly chart, and we are beginning to tip up on volume. Now, typically, if bonds really start to power up, it's normally a flight to safety. It's normally seen as a flight to safety. On the other hand, the markets do need a healthy bond market, because if these bonds aren't supported, yields go up, the cost of servicing the 30+ trillion debt that the US have gets more expensive, and then that creates a credit problem in the markets. So what we need is, for stability, we need a healthy bond market and a healthy dollar market without excesses. So if this, you can see how this fired up in February, March, as the market tumbled. So we got a big 1, 2, 3 wave push as the market tumbled, and at the moment this is turning from a critical point here. So if these bonds continue higher here, that means the yields come down. So that's healthy. What we don't want is the bond market dropping through the floor. On the other hand, we don't want everybody rushing for the door in the stocks and commodities and piling into a safe haven like the bond market. So as long as this is stable and doesn't get volatile, then equity markets are sustainable and this could push higher. If we look at the dollar index, we've seen 3 weeks of fairly heavy selling. Now the main thing that this is telling me is the potential for the commodity market, and gold in particular, but particularly the commodity soft market like grains, corn, wheat, etc., is good, and we're seeing that at the moment. Where is everybody? It's a low attendance, and I'm not quite sure where everybody is. So if this is going to drop, this is potentially good for the short term. What we don't want is this plunging, because that could spook the markets. I think if this plunges, it's the world's reserve currency still, so the sight of this getting really out of control I think it's going to spook the markets. So if we come down into the support and hold, then I think we can again see some stability in the stock market. So we're coming, all we're doing at the moment is coming into support. But if you get to the stage where what happened in the 07-08 credit crisis was we just had complete flight to safety. We had all these markets coming up. We had the bonds, the dollar, and the gold all shooting up. So complete flight to safety. So at the moment we've got a fair degree of stability in the 10-year notes. We got the dollar just coming back into support, and we got the gold that has perked up but is not running away. So at the moment we have a stable environment, but if at any stage that starts to change, then I think we need to hold on to our hats. Look at the volatility index. We have seen this is actually a threat for a higher move up here. We've had a new low with a slightly higher close, but it's marginal. Look at the volume in the volatility index. So if they're buying the volatility index, and this last time this index got bought and broke up, we saw the market plunge. So there are signs of some early signs of some instability in the market. At some stage, we're going to get a healthy pullback. I think we got some further move to run to the upside before that happens, but we are very extended, very expensive in the stocks. So we are vulnerable to pullbacks at some stage in the future. I mean, selling May and go away. Well, we're just about to tick into May next Saturday. This is the last full trading week in the month. So let's just pick the rest of this market open and see what that implies. Right, let's look at the tech index, the Nasdaq. Excuse me. You can see how we made a new all-time high 2 weeks back, and we were flat or marginally lower of this week. Now this is a weekly chart. That's what I would call a spinning top. A spinning top normally can mean two things. A, it could mean this market is not sustainable up here and could drop. Normally it means the market's due a pullback. Now, if you look at the volume, we have seen the sellers come in. So the high was not supported, and we ended up closing the week lower. So, and if we look at where we are in terms of the moving averages, we are distant. We are somewhat distant from these averages. There's the 20-day average. The weekly's got the spinning top. So in the first part of the week, I think we could see some pullbacks. And once we get the Fed out of the way on Wednesday and GDP on Thursday, if we can come back into this support area, then in theory, we should go back. If this market is sustainable, we should go back to 14,000 and break higher. If we cannot hold these levels, then we're going to come all the way back to 13,000 and lower. The MACD is just crossed up. We are above the midline, but we are just a little bit extended. Every time we get extended, we pull back. We got extended, we pull back, and so on. You get the idea. Even up here, we came back into a trend line. Okay, so at the moment, let's look at the weekly, daily chart in a minute. Let's look at the daily chart now. So I mean, this is better. This is a lot better. The fact that we come down to the 20-day average and closed above the February 16 highs, that's very bullish. So if we come back into the 800 area, we should, in theory, go and test this upper trend line. So on the daily chart, we were really flat last week. We got that support. We got that resistance. So if we open and close underneath this 890 on this Nasdaq, that is could signal this market is not sustainable. If we close at any stage during the week under 700, then I think we're going to see some significant pullbacks early on. But at the moment, that close of Friday suggests that we could, any pullbacks into this Friday, into last week's support at 800 is viable. with a 300 pip move push up to the upside. Dow, really flat. So a lot of, when a new high up here on the 16th, we closed inside this range on Friday. So we failed to hold the high, the new all-time highs, but we got this support underneath. So that would suggest to me, if this is a bullish consolidation, we need a pullback. Maybe break this low, come into some support down here, and then potentially start to wind up. So if it's a bull flag, we still need a dip to potentially get the volume going. We had a similar situation over here. We had a really bullish move here, and we didn't get going again until we pulled right back. Now, at the moment, we're flat and not pulling back. So that's why I think we need that to dip to get the volume back in and get the buyers back in. Okay, let's move on to European indices. Let's look at the DAX. So Monday, Tuesday, we dropped hard. This is the same bullish consolidation we're potentially facing with the US indices. Here we push right up, a bearish close down there, and then flatlined until we had a peak up and then a drop. So we've basically done a 1-2 wave pullback into this support, and potentially any dip down here could see this become a wave 3, and we need to make a new all-time high by Wednesday latest. Otherwise this is done. And if we start closing under here in the first 1, 2, 3 days of the week, so if we don't start climbing higher, then this is due to come back, and this is a distribution pattern, and that is going to have to come down to meet these lower levels. So no reason to sell at this stage. We are, this dip was bought. We did close higher in the second half of the week, but it's fragile. And the indicators are actually under the midline and getting bearish. So just watch out for particularly how we close on Monday. If the market's open Monday and just slam this down and stay down, then you need to be considering where you are with your portfolio, your investments. But at the moment, this is bullish consolidation has potentially been completed with this downward force and the subsequent higher closes into the reaction. However, if you look at the fact that, if you look at this sell on Tuesday, we spent Wednesday, Thursday, Friday in the middle of it. So there are definitely some issues with the way in which, with the levels of this market and the extent to which we've come up on the back of, the post-COVID world. So what we could be seeing up here in the DAX is similar to what we saw in February. And the February situation was resolved once we dipped right back to 13,680. So we could come all the way back on this one to 800, 880 and still be considered very bullish. That's the breakup area. That's the last breakup area. So if we did pull back but only came back into this area here and subsequently held this, then that would give us a signal the next layer up. So there is some suggestion that we could, at the very least at some stage in the coming weeks, start to see this sell in May and go away. But I think we've got one last leg in this market before this pulls back. So that if that's a shoulder ahead and a shoulder, the neckline's under here. This is effectively the neckline. So opening and closing, we need to open and close underneath 15k to have any real significant fear in the market and weakness. So the fact that the second half of the week closed up means that potentially dips are still viable as long as we don't open and close underneath that zone. And you can just do that with all of these markets. Now, if you are invested in the US, then mark off last week's support and watch it carefully. If you are invested in Europe or just the UK, watch for these indices to indicate what may be ahead. So the first test of 7,000 on this FTSE was rejected. We held up there on the Friday the 16th, but very quickly came back in the first half of last week and only just clung on in the second half of the week. So I wouldn't be surprised to see us come back into 6,800. That would still be relatively healthy as long as we didn't close under 6,800 before we made another attempt at 7,000 and potentially bust up back into this pink zone up here at 7,300, 7,350. Okay, so as usual with these markets, potential short-term pullbacks. Well, I say as usual. It's been usual since the turnaround in April, May last year. But as with this significant pullback here in back end of June, July, the US market didn't do this. The US market struggled into the back end of September and then pushed up. Well, this took well into November to get going. And this has been the FTSE up till now has been lagging significantly, and this has still got a lot to catch up to in relation to DAX and US. But UK stocks have been very resilient up till now. So if you are just a pure UK investor at the moment, that resilience looks set to continue. Right, let's just quickly now go through the main commodities. Gold. We've pushed up here. The volume's really lacking up here. So if I take this out of the equation, I think we could fall right back into this trend line. That would take us back into about 1735. So I don't think I don't think this gold's ready to push up here yet. Bear in mind we've got a weak dollar. We've got a weak dollar and a weak gold. So that does not bode well for the gold. This relationship, a typical healthy gold relationship, is very divergent with the dollar, and at the moment this is not. So if you are looking very hard at short-term gold, I think we are going to come back into this zone. Silver. Now you hear people like me go on and on about how silver's got an industrial element to it and gold hasn't. You can't do anything with gold apart from sit on it and stick it on your finger or ear, or whatever it is you do with gold. So this has got the potential to fall back in this 25 and a half. However, this, all we're doing with silver at the moment is holding this breakout area. So I would expect shallower pullbacks in the silver. If you see 25 and a half, I think that's still viable. I would expect to close the week above 27 on silver. Yeah, okay. Yeah, there is some electronic use of gold, but it's nowhere near that of silver. The industrial consumption of silver in medical instruments and the like. Right, let's go across to oil. Pretty resilient. The volumes have not been great in oil. And where are we? Yeah, I think typically oil does tend to dip at this period. The dry season contracts are pretty much in place. I think the behavior we've seen in oil, we've seen, again, we'll bring it back to what I've said about the dollar. 3 significant days of drop in the dollar, and the oil could only just about muster 62 with a pretty poor showing on Friday. So I would expect, I'd very much like to see oil come back to 59.75. It is holding these averages. We have got a bullish. Actually, that's a bearish cross, isn't it? Yeah, that's a bearish cross. So we need to close back above these averages. Would need to climb back above 62 for us to start to climb back up. I think I don't think I would really like to see 59.75. I'm not sure we're going to see it. I think any pullbacks in the oil will be shallow, and you may only see 60.61 before that makes another dive back for 63.5, 65 plus. So the oil held up okay. It's the volume might come back once we get the Fed out of the way, and might perk up once we get that GDP figure. And let's look at wheat. So this is, there is, these soft markets are not pulling back to the extent I wanted them to. We saw $5.80 on 31st of March. That's a very powerful move above $7 on the wheat. So one thing you could do is to look at these ETFs on these soft commodities. There are commodity indexes you could buy rather than a wheat ETF. You don't have to buy a wheat ETF. And if you look at the beans, beans have held up really well ever since this breakup in August last year. Well, in actual fact, we started the journey here in May. We were down there at $8.40, and now we are $15.20, with no sign at the moment of that pulling back when we're up here on volume as well. So that's why I'm suggesting and have been talking about the soft market ever since spring last year. It's very bullish. Let's look at, actually, let me just drag this over. Let me look at other softs before I move on. I've worked out why my charts are slow, so hopefully you won't experience that again. Cocoa. Yeah, this has pulled back further than I expected, but let me tidy this up because I've got an awful lot of mess on here. I'm going to help myself and help everybody if I can just clarify what this market is doing. We filled a gap. That's all we've done. There's the gap from November last year. We filled it. So now I think we can go on get another leg up. I think as in line, so we saw a huge trend line drop at the March highs. But I think what we saw back here in November is should be repeated here. So if we can close above, or at least stay, all we need to do is stay above that 16. It could quite easily come back into 16 as long as we don't close underneath 1590. I think that's higher, and any pull back into this 1610 I think is buyable. Again, you don't have to buy a cocoa ETF, you could just buy a commodity ETF and spread your risks. If you look at coffee, breaking out, almost back to those highs. If you look at lumber, it's spiked higher but still held up. Orange juice. Orange juice looks as if that's due a break to the upside. I think that's going to pop back up to these highs and might start to run. So dollars weak. Inflation is well and truly underway. The US is potentially looking for at least 2% inflation this year. So that then throws the whole gambit about what are the US going to do about interest rates? Well, Chair Powell has said he's happy for inflation to get above this 2% and still do nothing with rates. He wants to stand back and let inflation so-called normalize and get back to these higher rates before he's prepared to start to think about raising rates. Hence the weak dollar, hence the way in which a lot of these soft commodities are pushing up. Now, if the soft commodities are going to push up and the metals, then one of the things you could look for is, let me do a search for this. Emerging markets. So here you've got a weak dollar normally benefits emerging markets. Now I'll talk about the other market I think is, apart from commodities. So if the US equity market is sustainable, the dollar stays weak but doesn't get unstable, then one potential market is for these emerging markets to creep back up. Yeah, okay. Thanks, Thomas. Okay, so that's one idea. This is EMDL. This is Bloomberg Barclays Emerging Markets. Plenty of other. Do your research on these ETFs. I think a good website is investing.com or ADVFM. These kinds of websites are good to help you look at ETFs to look at. Right, moving along to, let's keep that theme of commodities and start looking at these miners. This is POG, and with POG we are above this pink zone that I identified last week. So there is the little breakout pattern. Here's the structure. So the pullbacks were 25, 25, 30. There's still plenty of time to buy this. I mean, if gold does hesitate, You might see 25.5, 26 again on this. You might even see lower. Now it's only just poked its head above that area, so that there could still be another pullback before this is getting ready to go. Assuming it does go, I don't know. Nobody knows where it's going to end up. None of us, nobody on the planet knows where POG's going to turn up. But the pattern at the moment suggests that overall, by the second half of the year, we should be back up to that 40 mark in theory. Let's look at Griffin. Griffin's just sitting up there doing nothing at the moment. Volumes are very thin. Very thin on that one. Fresnillo. Volumes are actually thin on this one as well. And Fresnillo did not have a particularly great week. At the moment, Fresnillo looks as if that could come into 870 area. But that doesn't start closing above 910 quite soon. And obviously, if it keeps closing lower, then that next stop is 810. Crossing to polymetal. Been on a very nice run ever since we came down to this 1390. There's your buyer signal on the 31st of March. New low, immediate close above. 31st of March at that 1393 was a massive buy signal. It's been on a nice run and hit a lot of resistance. So you might find that creeping back to 1528 there. You might do. Volume, there's seen certainly some profit taking the back end of the week. Volumes have done okay on this journey up, but they've not got excessive, and we did see some profit taking on Friday. If you're in it for the long term, do nothing, just manage your risk. If you're looking to get in it, then consider setting an alarm for 1525. Moving across. So we're already over half an hour mark, right? Okay. So next up, let's go through the list. Ex-div on the 6th of May. Okay. It's not that far off, is it? So keep an eye on that. Right, now to my list. %. Wow, okay. No wonder it's perked up. Right, let's stick to UK stocks first. SSE. So it closed. It came all the way back to this 1460. So this time last week, where were we? We were looking at this on the last Sunday was the 18th. Yeah. So last Sunday I suggested that could come to 1460, and it went a little lower at 1456, 58, and had a good push on Thursday, just a little hesitation on Friday. Volume's not great on this, but it is holding up. So I would have thought you may see that dip to 1475. As long as we don't close under 1450, then this looks as if we could see that 16. Next stop 16. So at the moment, SSE is doing what it's predicted to do. Let's look at Let me go through my list. I'll shout these out. Hammerson is flat, but looking higher. Rolls-Royce is clean, is 101.75. So as long as they don't close under the £1, that looks higher. BT is not doing much. It's grinding higher. Closed at 155. Looks. I'm still looking for that to get close to 175, £2 on BT. IQE. Right. Let's call the IQE chart up because this one's looking very interesting now. Yeah, so we came all the way back to 55 and we've closed up at 59. So I took some heat on this, got in a little bit on the high side, but kept my stop out of trouble and looking for this now to go back to 63. So as long as this doesn't close under 54, 54 and a half, we look as if we're capable of climbing higher. We've got results coming up next month. So if I pull back, you can see this is a really nice platform that it's come from, but it's got the potential to keep winding up. So I'm going to sit tight. If you're interested in this stock, then try and bid on 55, 50, 56. So a dip here, and then keep your stop under 51 if you want to. Well, certainly under 54, 51 if you want to keep that stop out of the way. Right. John Wood is holding up. That's dipped into second half of the week, but just about clinging on at 263. Andy's Avast, these are Andy's ones. Andy's Avast is holding up. Let's get Avast on. Well, I said early on in my session that the UK stocks have been very resilient, and so we're holding this support underneath on Avast. So you might still see that dipping to the 470 area, but we need, for this to get going, we've got to close a minimum above 490. Anytime we close above 500, we could start to wind back to 540 plus. So it's an okay chart. Volumes are getting better. We've seen some increase in the volume this week. So there seems to be more people looking at it and putting their money up for this, Avast. So that is at the moment looking good. Right, let's look at what's Tullow doing. Tullow's still consolidating under 50. In line with a flattish oil price, really. You might still see 44.50, 44.80. Volumes are a little concerning on this. Now this went up on very decent volume. Obviously it's all profit taking. It's dipped right back to that support. The volume has really tapered off. You're at SEE. Oh, so you took a punt at 88, right? Yeah, so if this, notice the way it can't close above the 80-day average. And given that oil is dithering somewhat, and given the seasonality of where we are in the oil cycle, it's possible that may creep back further into this breakout area. Possible, particularly on the fact we've not got the volume to support this price at the moment. That's my sort of devil's advocate, bearish angle on this. But the fact is that we're holding up above 45, so all the time we're holding up above 45. That could start to climb from this point. Sage has pulled back and held. Sage pulled back and held the gap. Close at 647. Money Supermarket is not looking good at the moment. That has not had a good week. It's fallen right back into this support. Concerned about the lack of volume up here. Once we sprung up there, they seem to sort of almost pumped and dumped it, because this volume's been it's come down on low volume, which is not healthy. And we also came down here on an increase in volume, which is very unhealthy. So if we don't start to pick up soon and close underneath this 250, I need to scratch that. That's on the line at the moment. It's definitely on the line. Right. What else have I got for you? Let me look at my other lists. Bear with me one moment. Let's do a quick review of the main UK stocks. Yeah, I noticed, I think EasyJet's had a, I thought EasyJet had a pop. Barclays is still holding above 180. So looks higher. Sainsbury's dithering around above the 240 mark. Chewy is not going anywhere at the moment. Okay, look at HSBA in a moment. HSBC. It's making a series of lower lows and lower highs. So, and the volume's pathetic. It's above the averages. So it's holding, but there doesn't seem to be. And if we close above the £4 mark, could find ourselves closing that gap pretty quick. But it's not a stock I'm in, not a stock I like. FYI. Let's look at EasyJet. I'll come to your other ones in a second. Yeah. So US banking reported last week and UK banking next week. What was I going to look at? I think. Bear with me one moment. BP is dithering at 290. That's flatlining at the moment. Oh, EasyJet, that was it. Same story with Chewy, holding a key support level, but just not going anywhere, which makes me think it may want to dip first before it's ready to go. Volumes, not great. They're okay. Mediocre. I mean, it's not, again, not a stock not a stock I'm trading. I think that wants to pull back. I think that needs a dip before that gets going. Anybody interested in that stock? I was going to say bid on £9, but it might come lower. Right, let's look at HSBC. It's been on a little run up to that 436. It seems I'm becoming a bit of a record where the needle's stuck, because they're all these stocks have dipped, been on a little run, that's been up to 440, 444, come back to the pink zone that I've drawn some time ago. Just if you're in it, be careful if it starts closing under 410, and of course be very careful if it closes under the £4 mark. But on the face of it, it looked all right. AIG. AIG. Yeah. Again, I wouldn't be at all surprised to see that down at 175. I'm just seeing a lot of resistance up there. Lower highs, lower lows. I just think that's stuck, and short-term lower, long-term higher. Where's airlines? Right. I don't know the name Viz very well. With okay. So EasyJet's come under some pressure then from some competition. Okay. Thanks for that. Like I said, I'm not a fan of EasyJet anyway, because I'm not interested in that, investing in that sector mainly. Right. What else do you guys want to look at? I'm just looking around. I'm going to look at some US stocks in a second. Let me check my other lists. Let's look at Astra. That looks like it wants to see 74.35. Been on a nice run. GSK. Same story. We had a really decent burst on the 15th. I can see that coming down to 13.15. May not get there. If we start closing above 13.45.50, that could go back up to 14 pretty quick. Informa is pulling back. I'm increasingly liking. It's done nothing since that 9th November. Well, that's not true. There's a nice little pullback here. So where's the structure in this one? I can see it coming back into this February 22nd. I can see that coming closer to £5. We're up there at 6. I could be wrong. I mean, if we start closing higher here, Informer may not pull back that much. ASOS. Now this I do like. It's making. It was making higher highs. We are holding this support. I can see this one holding 50.65. Volumes not great. So if you're patient, if you're interested in this one and you're patient, you may well see that coming back on itself. Okay. TCAP. Are you referring to bearings? TPI cap, okay. Oh, right, there we go, there we go. TLPR, I got the ticker as TLPR. Well, I can see that drifting back to 233. What do they do? That is a very interesting chart. Bond brokerage. You know what? I like to look at this one. I would like to be able to bid on 230, 233. Yeah, I'm definitely going to follow that one and potentially bid on that one. So we were up there at 350. Yeah, that's a very interesting chart. I thanks for that. I do like the look of that. Rent a kill was low. I like rent a kill. Again, you may see that back into 490. I think it's worth being patient on that one and bidding, waiting to see if that can pull right back. What else have I got? IG. No. King's. I can't remember what this one does. Isn't this cement or building or something? Wow, the volume's really weak on that. Rackets. Rackets looks if we could see 64.85. Sage we talked about. That's not actually closed the gap. It's possible that may want to come further back. Right, I think that's, let me look at my US now. So I was in, so these, look at this. I was in this, I was in this on a higher number and bottled it because we came all the way down here. We came down a long way. I really thought this was going to hold up here. I thought that was going to be sustained. Once we started dropping out of the zone, I just pulled it. This is skills. It's got a tick of FEAC. Okay. I'm gonna back off and leave it. And this one as well, Fubo. Now I stayed in Fubo, kept some Fubo. Again, this went lower than I expected. It's coming up on volume, but I just being much more cautious on these so-called growth stocks. PayPal, the Pfizer. There's the pop in Pfizer. It was a long time coming. That's been a long time coming. That could so easily come all the way back to 37. We're only closed up there at 38.70 anyway. Right, I'll look at that one in a minute. It shows you, this is Curiosity Stream. This is a streaming channel. And this gives me confidence in the US market when these growth stocks are picking up. Bristol Myers. Right, okay, so we've hit the first target in Bristol Myers. I can see that coming back to 65. If we go back to 66, 67 in a few days, then I can see that climbing back to 72, 73. Let's look at eBay. So that 64, 65 was a problem for it, but that's coming right back into support. I think, and I'm liking the volume, I think this is viable. If that dips to 60, I think that's viable. And Zoom. I like Zoom. I'm in Zoom at these lower levels. That's a nice close on Friday. Again, volumes are pretty pathetic at the moment. They are picking up. I think if that can close back above 340, I think that'll bring the volume back in. I'm not filling my boots on Zoom, but I still think that's capable of going higher. Right. From Zoom to Vroom, that's already gone. 26. Look at this. You catch a bid on these stocks. That's gone from 27 to 45 in 5 or 6 weeks. So UK stocks at times can take weeks and months to do that. Right, let's look at, that's Etsy, that looks higher. Let's look at this TTCF. What's this one? TTCF. Tattooed Chefs. I like the name. Stocks related to food. Oh, yes, that's a nice chart. That is I'll tell you why I like it. It's got a very good rhythm to it. There's a 1, 2, 3, 4, 5. Then you get a three-wave correction. 1, 2, 3. Then you get a 1, 2, 3, 4, 5. It's got a good rhythm to it. 1, 2, 3. So this C wave pullback here at 14 gave you a lovely move into 27. We're potentially off on another run here. This is a very, very nice chart. So it's knocking its head against that 17.5. I think there's plenty of time to get in this. If that can pull back to 16, 15, 16, I will bid on that. There's a number of plant-based food companies that have done exceptionally well in the US market over the last few years. So it's a market I do like. And look at the volume. This is a big tick. This is the difference between so many stocks we looked at. You've got a lovely increase in volume here. So this move back here on the 20th fell right back into a key zone. A level from the 2nd of December. And the last time we fell back into that zone, we went to 27.5. So if we start to crack above that 20, it's possible that if this really catches a bid, we could see 32 and 37 possible. Over what period? I don't know at this stage. And we would need to see a continued and sustained move above 17, 18, 20, etc., etc. Okay, that's interesting. Yeah, markets don't like things like chief financial officers moving. It just spooks them a bit. Right. Anything else you want to look at? Because I'm just going to wind up now. But thank you very much for that tattooed chef. That's and the TLPR. That looks good. I've got nothing else to look at this stage. Frustrated about those two growth stocks that took so much longer to come back on. Right, thank you very much for your company, guys. I'm going to wind up here. Yeah, thank you for your time and input. I don't know if Andy's picked his wife up yet. Brilliant. Okay, thanks a lot, guys. I'll have a good week, and if you're around for Wednesday, I look forward to seeing you.